All right. Hello, everyone, and welcome to our weekly investing power hour. Kind of changing the name a little bit because we don't really just talk about dividend stocks when it comes to the power hour. So, this is going to be our investing power hour moving forward. Since we like to mix in growth stocks, we talk about ETFs and index funds, and of course, always dividend stocks because we love it all. And we all have one goal in common is we're all focused on building long-term wealth. So, who do we got watching right now? Let me know, where are you tuning in from and what is your latest buy? What is the latest stock, ETF, growth stock, or dividend stock, either or, that you've added to your portfolio, and let me know where you are tuning in from. So I see that Jay is there. What do we got, Jay? Jay, let's go. I bought some Meta calls. Cha-ching. Perfect. That was good timing there. I did get into some upside Meta stuff myself as well. Sean, returning viewer, good to see you from Singapore. Sold a portion of MMM, which I did as well, and PHM for profit, and bought V, which is Visa, after doing some of that valuation there. So if you guys haven't been paying attention, 3M, yes, the slow moving conglomerate, actually shot up over 20% in the past week alone. This is a position that I showed folks that were tuned into my Investors Edge newsletter, where you get to see all of my trade alerts. I was buying that back in, I think it was June 15th. And boom, we got that 22% gain, sold out of it from that standpoint there. Really not much more I could ask for from a stock like that in such a short period of time. So great play there, Sean, for you as well. Paul from New York. John, good to see you from Tulsa. Matthew, thanks for tuning in. Drew, checking in from Minneapolis, Minnesota. Happy about that 3M there. Billy, have daily recurring investments in JEPQ and Pfizer. Pfizer's another one that's had a good little week there. So that's pretty awesome there as well. So what else? We got Cindy tuning in, returning watcher there. Good evening from St. Louis. Hope all is well there, Cindy, with you as well. So thank you guys again for tuning in. This one's going to be a little bit different here. We're not going to be going through our normal slides. We're going to go through a lot of the earnings reports since we're in the thick of earnings season. There's still a long way to go, but we've got some massive reports that have already reported and some more that are coming for the rest of this week here. So we'll be talking about that, where the market is, talking a little bit about the Fed, but we also want to do our kind of my mid-year check-in. I haven't had an opportunity to do that, where I like to each and every year at some point every 6 months or so do a check-in with you guys and get your feedback on the videos and the content that we're putting out. Do we still like the live shows, or would we prefer an extra video on Wednesdays instead? Just want to hear your guys' feedback and know how can I help you when it comes to the world of investing? Because that's why I do what I do, is to help us retail investors become more acquainted, more understood when it comes to the market, so that we can all build wealth and we do not get left behind from that standpoint there. So let's jump in over to the iPad here. We'll be utilizing that a lot more today, and we'll get into some of those questions. But how about the stock market? How about that stock market this past just today alone? I mean, we got the NASDAQ up 2.64% today. That was just fantastic from that standpoint there. AMD leading the charge. So the 5-day up about a 1.5%. Over the past month, though, we have been going through a bit of a correction, starting to see a little bit more of a broadening out in folks' portfolios. However, once we get the earnings, if they can back up these high valuations that some of these stocks are at, then it makes sense. But if you've been following AMD, and I've been talking about that for a while, AMD is a company that was actually down 40%. They were going through their own correction of sorts, much more than a correction, down 40%. So they weren't really set up to perfection like some of these other high flyers have been from that standpoint there. So love the live shows, says Drew. King David is in the house. Jeffrey, listening from South Washington there. No buys this week for Jeffrey. Mac and MD. Peter Parker. Are we sure that's not my son watching there? He loves him some Spider-Man. Drew loves the live shows. Sunny Man. Hi, Mark. Bought some PFE, also some CEG. It took off. Nice. Love the Wednesday dividend power hour, investing power hour now. Cindy there. Awesome. Hey, Mark. Good to be here on the regular now. Ty from Seattle. Good to have you, Ty. Thanks for tuning in. Venezuela's in the house. Some PZZA and good. Awesome. Mario. Hey, Mark. Buying 1 share of SCHD every single week. There we go. How about that for some discounted cash, or not discounted cash flow, some regular buying there. Power hour is the bomb. or we'll leave the word out from that one. ADC and M Green Mac went REIT shopping here. So we did a little REIT shopping there, buying some IIPR, my best performing dividend stock. Sold Crowd. Might be a buy again later when and if they recover. Yeah, so I've gotten a lot of questions when it comes to Crowdstrike. It's a company I've liked, and I've been if you've watched any of those investing webinars that I do at the end of each quarter, my common theme coming into this year and continuing moving forward has been around obviously AI, but the other big one has been cybersecurity. Cybersecurity has a ton of runway, and Crowdstrike was at the top of the mountain. It's a stock I liked. I actually owned a bit of it for a while, for those of you that watch my portfolio on the Stock Investor's Edge, but I did sell out of it. Luckily, obviously I didn't see anything like this coming, but then it got hammered. And right now, that at this point, you have to throw out all of those valuation practices, anything that you've learned within my 6-week course around valuation, because this is a very different situation that's going on here. They have reputational damage. Now, do I think they can recover eventually? But is there a quick catalyst up? I don't know about that, because we've already seen reports coming out about different companies going to sue the company to try and get to recoup some of those losses. These are large companies that were down for almost a full day, losing out in millions and millions and even billions of dollars. I mean, just the Starbucks is an example. I went to order some Starbucks that particular day using my app, and lo and behold, the app didn't work. That was in the morning. Well, later in the day, I had to run to the UPS store, and there's a Starbucks right next to it. I was like, I'll get me a little pick-me-up. App was still not working at that point. Of course, we can't go in and order the old-fashioned way. What would be the idea behind that? Actually, we have to go back to old school talking to people, but that's what I had to do, and it was enjoyable from that standpoint there. So, all right, like and subscribe. The Jay, I haven't seen you for a while. The Jay, where you been? All right, what do you think about VTKX? Just had a good earnings report, entered last stage of weight loss drug trials. When it hits the market, you think it'll take off? Not one I'm familiar with, so not really going to have much of a comment on that. There's a lot of these weight loss type drugs coming out now, but which is a good thing overall for the companies. But I think as more data starts to come out on the folks that are actually taking these drugs from that standpoint, there's a lot more studies and research being done by companies that aren't actually creating them. It's on the other side now, actually health companies, that it's showing a lot more that, yes, you're losing overall weight, but the weight that you're losing happens to actually be muscles. You're actually losing more muscle. Now, I'm no doctor, so don't take any of my word from this as it pertains to any of these drugs. It's just some of these research reports that I've started to see come out little by little. Now, of course, there's a small sample size because they haven't been out for all of that long. However, the reports have consistently shown that it's been a lot more in muscle mass that's been going down rather than actual that bad body fat type stuff. So in a sense, weight's going down, but as a percentage of fat and muscle, you've actually reduced your muscle, and that increases your overall body weight. So in a sense, people are losing weight and getting fatter, if that makes any sense. I have no idea. But again, I'm just a CPA talking about stocks. So let's get back to that. Andre, good morning. What happened with Nvidia? Great question there. So Nvidia really plowed higher for a number of reasons today. Microsoft talked about its continued investment, and a lot of that investment is around AI. We saw that with Google in the prior days, or prior weeks, I should say, and they had a big CapEx number. There was a lot more investment. Where's the investment going? It's going into AI. All of this AI stuff directly impacts in a positive nature the likes of Nvidia most of the time. So when we saw Google, we saw Microsoft, and that's why Microsoft pulled back a little bit, because they had increased spending overall. Same reason we saw Google pull back, because of their increased spending. So I don't have a problem with this spending as long as it's equating to future growth. And all of these large companies that have shown us their ability to continue to increase their capital expenditures, increase their investment for future growth, we are seeing future growth. If we were seeing increased CapEx and flat growth, I would have concerns then. But these pullbacks I see as buying opportunities from that standpoint there. Alphabet's already one of my largest positions, as is Microsoft, but I jumped in and did some AMD options yesterday. That paid off handsomely. Sold them right at the start of the market today. AMD was up 10%. Boom, sold them, got out of it. Did the same thing with Meta today, right at the close. Got into Meta calls up there. Going to do the same thing tomorrow. Right when the market opens, boom, let's get out of them, close them for a profit, hopefully, long as nothing changes overnight from that standpoint. So A lot of this, though, is AI investment, which we have seen impacts in a positive way the likes of Nvidia. Go in a different direction. AMD reported that fantastic report. It was a very solid report. That is a close competitor to the likes of Nvidia. Let's push it up there even further. Analysts coming out, making it its top pick. All of these things coming out in a relative short amount of time. And at the same time, just looking at Nvidia, the stock has pulled back over 20% in a short period of time there as well. So there's a lot of catalysts overall to like still when it comes to Nvidia there. So all right, bought some more JPMs, a little financial sector. We got AbbVie, Healthcare, ENB, NEE. That's a favorite of mine there, along with Vici, a favorite REIT of mine, as well as Realty Income. AI, here comes Spidey. AI will increase the need for increased cybersecurity and increased data centers, which you can go the REIT route, EQIX, DLR, number of different ways there. Andre, good to see you. Bought some more Visa, Uber, SPLG recently. Robert from Southern Maryland, ENB. Nice. Great to have you, Robert. King David bought some treasuries and some Bristol Myers. We'll buy some PepsiCo and Jeppy. Is it too late to buy LLY and Novo? When you're looking at a valuation perspective, doesn't mean they can't keep going up, but from a valuation perspective, and again, when it comes to me investing in stocks, 70 to 80% of the reason why I invest is going to be centered around valuation. I will utilize technicals, but it's a very small piece of the overall puzzle on why I invest in a particular stock. I want to see and first make sure, is it a safe balance sheet? Do I have improving metrics when it comes to an income statement? What does the cash flow statement look like? Then let's progress and look at valuation from a number of different angles. And those of you that have taken my 6-week course understand all of those different angles that we like to look at. We go through my investing checklist. So if you're just asking me from a high level, valuation looks expensive, and it's neither two stocks that I'm looking to add at these levels at all. They've run up a lot. Yep, exactly. You nailed it right on the head there. Cameron bought some VOO, SCHD, and QQQ. How about that right there? Just 3 staple ETFs. And when I often talk about the importance of building a solid foundation for your portfolio, how about that right there? S&P 500, SCHD, very little technology exposure. It is a great complement to the likes of QQQ and VOO, which is supposedly an S&P 500, supposed to be broad, but it has really, in a low sense standpoint, become a bit of a technology, a Mag 7 type of ETF. Mag 7 takes up 40% of the ETF now. Communication services and combined with technologies about 40% overall there. So it's not as broad as it once was. Larry Roach tuning in from Dallas. Great to have you, Larry. VKTX, Viking. Oh, Viking. Wasn't there some reports? Again, I'm not as familiar with Viking, but I thought there were reports of someone trying to buy Viking, one of the larger pharmaceutical companies. I don't recall there. What if the market tanks 60%? Buy more? I mean, that I don't know if the market's going to tank 60%. What would create that? Something catastrophic. We might have other issues on our hands if it tanks 60% in a quick matter of time there. All right, Sonny, what do we got? Amazon earnings tomorrow, post-market. Oh, that's a favorite of mine. If you follow me at all within the Stock Investors Edge in our Discord community, which you can join completely free, you know that Amazon's not only a position I've regularly been added to, but it's one that I'm very high on. I believe there's a lot of upside. I still believe when you're looking at Mag 7 stocks from a valuation perspective, this is one of the best bangs for your buck that you can get. Does that mean run out and buy Amazon tomorrow? No, because when we have earnings, that's when stocks can get volatile. So let's see what happens. We've seen high quality companies pull back. You saw Microsoft was down 7% after hours yesterday. Didn't equate to that during the day. What was it, down 1.5% today by the end of the day, or 2%, whatever it was. But we saw Google have a big sell-off. Those are the opportunities we're waiting for when it comes to Amazon. Now, obviously, owning a large portion of Amazon, it could go either way. If it pulls back, great, I'll buy more. If it goes up, great, I have more. So that'll make some good money there. So no option plays on Amazon yet, but going to take a look and see where the volume is tomorrow, and we'll definitely probably have an option play on that one there tomorrow. All right. Slim, hey Mark, just popped in, so forgive me if you already discussed it, but your thoughts on CrowdStrike? I had to sell all my shares because I took a beating already. Yeah, so when it comes to owning any individual stock, that's going to add risk already. So anytime we branch out from ETFs and index funds and go into individual stocks, that ups the level of risk that we're taking because we are focused on that one particular company. Meta has seen a 17% pullback during a earnings report. Starbucks has seen a 20+% pullback over the past few months. Nike has gotten crushed. All of these companies are part of the S&P 500. The S&P 500, though, has continued to truck higher over a longer period of time because it's just a little piece of the pie. And that's where the keys to diversification can help build and give you stability for your portfolio. However, if we are going the individual route, that's that higher risk, higher reward. Because if we're in Nvidia, we're up 300% in the past 12 to 18 months. Meta, over a longer period of time, is up over 100% from that standpoint. So it's give and take there, but it adds level of risk. And without taking risk, that high risk, high reward. So you just got to be able to manage that overall from that standpoint. But CrowdStrike's got a lot. Just I don't see the catalysts for it to get back to where it was anytime soon. Doesn't mean I don't believe it will eventually, but right now I think they're going through this reputational harm that they've gone through. They're going to go through a lot of legal. I mean, the lawyers for them are both happy because they're going to get paid a lot of money, but they're also going to be busy and they won't be taking any vacations anytime soon if they're on that company there. So that's where I'm at with CrowdStrike. Picked up some Nvidia and Microsoft for Ricardo after hours yesterday as they sold off. That was probably pretty good timing there on the Microsoft play there. Thoughts on BDCs going into rate cuts? Been picking up some OCSL as it moves lower. BDCs have never been something that's just been a big piece of my portfolio at all. In fact, I don't own any BDCs right now from that standpoint there. So not going to opine on any ones that I like or don't like from that standpoint. Just something that, hasn't necessarily interested me as an investor. Alrighty. All right. So let's jump over to the iPad here. A lot of great questions. Look at all these. These are fantastic. Terry's in the house. Nice. Cameron, got a question. One more. Do you think VOIM is a good addition to the VOOSCHD QQQ combo, or is that over diversification when it comes to ETFs? I don't think, it's necessarily over diversification. I don't think VYM is some massive technology base. It's going to give you a little bit more in terms of a higher yield. So it'll bring up your yield where QQQ, VOO don't offer much in terms of yield. So if that's kind of the goal and the focus is, hey, I would like to increase my overall portfolio yield, VYM, HDV, those are some good examples to definitely go check out overall. So let me cruise back here and let's jump over to the iPad here. So let's take a look at our sector performance and see where things have been. So let's start by looking at year to date. We could see information technology is still leading the way for us, up 20% on the year, communication services, and now financials. So now, last week we only had, one or two sectors that were outpacing the overall index. Now we have three. So financials has joined in on the party there. S&P 500 overall is up about 14%. We have every single sector still in the green. So real estate is now firmly in the green at about 3%, still bringing up the rear, but we're not going to complain about being in the green there. However, over the past 3 months, things look a little bit different. And look at what we have over the past 3 months. This is something we've been talking about for the past 3 months. If you've been joining what was the Dividend Power Hour, now is the Investing Power Hour here. But regardless, we just talk about investing. We've talked a lot about REITs being undervalued. We do not want to chase high valuations and just have that FOMO investing style. We want to still take a solid approach and look for high quality companies that are trading at great valuations. Look at underperforming sectors and understand, do these sectors have upside based on what's going on in the economy? Where are we at in the economic cycle? REITs are going to get a positive outlay when rates come down. Are rates going to go up anymore? No. We saw the Fed chair talk about it today. Likely in September, we are going to get our first rate cut, which is going to be a positive when it comes to REITs there overall. So that's fascinating to see from that standpoint there. So we got them up 12%, information technology up 11% the past 3 months, financials, utilities, and healthcare, all 5 of those sectors outperforming the greater S&P 500 over the past 3 months there. And what is the single sector we have in the red? That has been energy. All right, let's hone in here on the past month. And look at this. Now we see most sectors are actually outperforming the S&P 500 from that standpoint. So it's very interesting to see where things have been and where things are going moving forward as it pertains to where we're at in the past month. So obviously a very solid day today for technology led by AMD, Nvidia, and the likes of many others. Now Meta is going to jump in on the communication services. That sector will probably be our top performing sector there overall. So, but that's where we're at in terms of the sectors right now. So, all right, the J, appreciate that right there, my friend. Thoughts on BND? Started a small position there. So if you have been invested in bonds, and for those of you unaware, BND is a Vanguard total bond ETF, index fund ETF type. And bonds have not been a place to be invested for a while. That typical 60-40 portfolio, you've probably seen all the stats that are out there right now, have not performed all that well. And I've talked about it on this this channel and this power hour for some time, saying that this is a stock pickers market. That doesn't mean we shy away from our foundation. You still want to have your foundational positions, but just because the technology sector is working doesn't mean all of the technology companies are working. Just because communication services sector is working doesn't mean they're all, because you have a lot of communication companies that are in there that have not performed all that well. But Meta and Google are in there, are in communication services. In technology, Nvidia, Apple, Microsoft have all been performing. AMD now in today's market have been performing quite well. Bonds, though, it really depends on where you're at in your cycle. So if you still have, 10 plus years, for me personally, bonds isn't something that I'm necessarily looking for right here. So with BND, let me see if I can pull it up for you guys real quick, just so you're familiar. Pull it up on the iPad if it wants to work. But BND pays a dividend yield, or a yield, I should say, not a dividend yield, of about 3.3%. So if you're looking for some fixed income, you're looking for somewhere safe to be, there's no issue here. I just believe there's so many other choices, and I believe there's so much more upside in other sectors, REITs being one of them, where I can get yield and upside potential. But it comes back to, where are we at in our cycle? If we're just a few years away from retirement, then yeah, we probably want to pull back on our exposure as it pertains to the stock market in general from that standpoint there. So that's where I'm at. BND is not something that I own personally, not something I'm looking to own at all to get that the yield in terms of the bond market there. So hopefully that helps answer your position or answer your question there. But thank you for that that little tip there. I appreciate it. I was looking at VYM today for Ron, SPHQ, a good sub for VOO in my core ETFs. Sunnyman, do you think banks benefit from rate cuts? I do. I do believe banks benefit from rate cuts. So what you're going to see when it comes to banks is the closely monitored piece that you want to follow along with is net interest margin from that standpoint. And that's really, for those of you unaware, is the difference between what they earn on interest from products they're selling, loans that they're selling, compared to how much interest they have to pay out. Think of savings accounts, high yield savings accounts, and money markets to people that hold their money within the bank. The difference is known as the easiest way to think about it is the difference between those two is what the net interest margin is, or net interest income is from that standpoint. So when rates come down, sure, that might reduce the net interest margin, but what it can do on the flip side is it can increase our loan growth, and we can, produce more loans, which is also beneficial from that standpoint there. So that's what I think from that standpoint, where I still think financials and banks could be a solid spot to be. So for me, I stick to the big banks. I don't jump into really any regionals. I have some Bank of America is my largest bank, and then a small position in SCHW. All right, Slim. I used my Crowdstrike sale and purchased IHAK. All right, what do we got here? Another Slim. Mark, it doesn't matter if you buy overvalued good companies, you can DCA down cost basis or lower cost basis with options. And yeah, that's always the case there. But at the same time, that's like just blindly investing. I don't want to, just because I like a company doesn't mean I just blindly invest in it just because I have the opportunity to potentially buy it at a later date from there. I'm always going to buy based on valuation. Now, valuation may not be super cheap. So yeah, maybe I'll nibble if the stocks come back 10% and but valuation still doesn't look all that intriguing, sure, maybe I'll nibble. But if you have a company that's trading at 35 times and they historically trade at 25 times, doesn't mean I should just, because the company's great, I should just go and buy it, because then I'm losing out on opportunity costs from that standpoint. Because what if now that company, that stock just stays stagnant for a while because the valuation got so high? You eventually, and I talked about it in last week's Power Hour, where earnings eventually have to catch up. When you have these outstretched valuation pieces, that's when stocks either have to stay muted and earnings have to come up, or the only other way to close that gap is stock prices have to come down, which is what we've been seeing a lot in the technology sector prior to today, but over the past week or so. But however, on the flip side, if I take that same dollar that I was going to invest just to invest in it and potentially dollar cost average later, why not go buy a company like Pfizer, which I kept saying buy in your mid 20s, even high 20s, which is now over 30. I'm getting 6% yield, plus I've gotten a 15-20% increase in a short period of time. 3M, bought it at a great valuation. That one's up 22% in a short period of time. I love Apple way more than I love 3M. However, it was an opportunity cost situation for me from that standpoint there. So hopefully that makes sense overall. Everyone's shorting. What do you think of Pfizer? Just touched on that one. So Pfizer's one I've continued to talk about. Again, I don't have a huge position in it, but at around under $30, I kept saying this was a great deal here. Where are we at on Pfizer today? I know it had a good little run the other day, but as of end of day today, we're at 30.50. So still, relatively where I'm looking, I still think there's plenty of upside when it comes to Pfizer, but this is something that I was adding to around that $27 range overall. What's real estate? EST is better. I'm assuming ETF is what you're looking for there. So I don't invest in any real estate ETFs. I've covered the REIT sector for well over a decade now, and it's something I'm really in tune with. I usually cut out roughly 15 to 20% of my portfolio, depending on where we're at in the market cycle, for REITs. It's one of my ways to invest in real estate and add that exposure there. So instead of having exposure to 100, 200 plus REITs, I would rather have exposure to the top 5 or top 10 that I like in terms of valuation and upside potential there. But if you are looking for a real estate ETF, to answer your question, VNQ is probably the most well-known that's out there. IYR is another option to definitely look at from there. Let's go portfolio. Do your magic. Do you think a 5% yield is possible in dividend income and still see growth? I think it depends on the company there. So long-term growth, if you're looking for short-term growth, you saw the likes of Pfizer and 3M, two stocks I just mentioned, who have upside yields, and the stock actually grew. Now, the stock's not going to grow like that, like it's Meta or Nvidia all the time, but it's a lot more difficult. Typically, higher yielding stocks do not grow as fast as lower yield stocks. So if you're trying to find the best of both worlds, it's going to be a little bit more difficult from that standpoint there. Just popped into Palantir and Nvidia. Merck is down 12% over the past 3 months, considering getting back in. I think that's a great one. So let me pull up. I think I have Merck on my board here. So let's jump over to the iPad real fast and show you guys Merck, since you brought it up. So Merck reported earnings this week. And if you guys followed one of my latest videos, this is a stock that was high on my watch list, one that I've been waiting for it to pull back. So the company actually beat on earnings here. So if we look here, and let me get the pencil going here for you guys so you can follow along, but you could see that we beat on earnings, beat by 14 cents. Pretty solid beat there overall. We also beat on the top line, 260 million above analyst expectations. We saw about 7.5% year over year growth there. So their largest drug that you want to pay attention to when you're an investor in the likes of Merck is Keytruda. So Keytruda is the big one there. They had almost $7.5 billion, which grew 16% from that standpoint there for just that one particular drug. Okay, great. Top earnings looked great. What you did for me looks great. But remember, when it comes to investing, it's less about what you did for me and more about what you're going to do for me. So let's take a look at the financial outlook. Did they give us any update as it pertains to guidance? Well, we see a couple words here. Raises and narrows the expected worldwide sales So that is now between 63.4 and 64.4 billion. The street was looking for 64.25 there overall. So that was one reason that we saw shares of Merck come down, was the although they raised the guidance and narrowed it, analysts were already looking for a raise from that standpoint, and they were looking for a much larger one than the company actually did. Okay, that's top line. How about non-GAAP EPS, earnings, net income? Think of it from that standpoint there. That is now at $7.94 to $8.04. So the midpoint there is about $8 per share. Analysts were looking for much, much higher, $8.45. So that was a huge miss on the bottom line moving forward. However, there, if you just stop there, and there was plenty of investors that did stop there, there is an impairment charge that is going in. And an impairment is, if you go out and as a company and you make an acquisition that has a value of X, and now a couple years later it's worth Y, you need to write that down overall. But I'm not going to sit here and bore you with the accounting jargon in terms of impairment. So it's a one-time charge. It impacts, you have to write it on your income statement as an expense. It brings down your net income. And remember, earnings per share is just net income on a per share basis there overall. So if you include this one time, this isn't part of our regular business, but we have to report it because it's something that happens. But as you can see here, if we report that, that has a negative 51 cents per share from that standpoint, which equates to the acquisition of iBio. So that was the acquisition they made that has come down from in terms of value for what they bought it for. So if the midpoint here, if we call that $8 per share, and you include 51 cents back in there, we're talking about something that's actually closer to 8.51, which in that is much higher than the 8.45 that you see here. Hopefully you can follow my playbook that we're seeing here. So I believe that it is an overreaction overall from that standpoint there. I haven't jumped into the stock quite yet, but for those of you that do follow on our Discord, you will see on our trade alerts anytime that I do make that purchase in the near term here. So that's kind of my take on Merck there. Overall, is I didn't think the quarter was as bad as we thought. Analysts got really upbeat on moving forward and how fast the company is growing. There's nothing fundamentally wrong here with the business. It's just not, it's growing fast. It's just not growing as fast as analysts had thought from that standpoint. So I didn't have any major concerns overall as it pertains to Merck, these are the opportunities that we generally want to find when we are looking for a new stock to invest in there overall. So hopefully that helps from that standpoint. What else do we got? The J's got Meta up 237%. How about that? AJ, Amazon, love it. Talked about it a second ago there. That's a company that I'm going to continue to look to add to probably be one of my largest. It already is one of my largest, but my actual largest one of these days. So Craig's got a comment here. Opinion on waste management. So waste management there, that's a trash stock. That's always my joke on Twitter. So got to throw some humor in here every once in a while, folks, right? We can't just talk about stocks and be boring from that standpoint. So waste management's one of those companies that's not going anywhere from that standpoint. And when we look at it, let me look at it on my other screen here so you won't see it here. But when we look at waste management, I'm just going to tell you guys some stats here, and we could pull it up actually on the iPad too so you guys can see what we're looking at overall. Waste management is historically a pretty good dividend payer from that standpoint. They offer a 1.5 yield, so you're not going to get rich in terms of waste management and the dividend yield that they offer there. However, for some reason that iPad's not loading on some of this stuff, so apologize for that. But 1.5% overall in terms of the dividend yield. Their dividend growth right around 8.2%. So historically, that dividend growth could be a little bit higher there. Tends to be around 10% back in the day. So that's slowing a little bit, but they do have 20 consecutive years of dividend growth, a low payout ratio. So that's something that I continue to look for moving forward. I don't think the dividend growth is going to stop anytime. So if you're looking for, a slow mover from that standpoint in terms of a dividend growth stock, that's one there. So over the past year, stock's up 23%. That's even with the big drop that we've seen recently. So what the stock fall? What was that? In the past month, it's down about 5% still. So it was as high as $225 flat, now sitting closer to $200 there. But I still think, from a valuation perspective, It's, probably a little bit close, slightly undervalued on what I'm looking at just from a high level quickly there. So, but do not have a position on that right now. Celsius, it's a stock that's going to continue to be volatile. Just one of those companies that's going through its expansion phase, but I still believe that it has plenty of upside moving forward, given its international expansion. It is in the very early innings in terms of international expansion from that standpoint there. So, Sunnyman, Merck definitely did take a beating there. So, Mark, what are some of your favorite REIT companies? Praveen, good to see you, my friend. Some of my favorite REITs are going to be Realty Income. They are going to be, which is kind of the gold standard from that standpoint. How about Agree Realty? Prologis, a great way to play the growth in e-commerce there from the real estate side of things. How about EQIX? That was just mentioned in one of my prior videos there. If you're still a believer that cloud and AI is going to continue to grow, well, you need more data centers, and data center is exactly what EQIX does. So a lot of growth potential there, tons of upside. And how about Vici? We cannot forget about Vici. So hopefully that's about a handful right there of some that I own and like a lot. So Cindy, awesome. Thanks for the Merck review, Mark. No problem. There we go. Someone liked it. Someone liked the joke. So keep adding to Google and Amazon. Got it, Mark. Thanks. Those are two that I like a lot, but totally up to you. Is BRKB a defensive stock? I think it can be viewed that way. And that is a great question there, is because the way I look at BRK, even though it's a individual stock, I look at it more as an ETF because of, the equity piece. Now, the equity piece is a portion of the overall portfolio. Berkshire owns plenty of other companies outright, think of the likes of See's Candy and stuff like that. But people tend to focus only on the equity piece, but you can look at it more as like an ETF that's heavy Apple. So if you aren't already overweight on Apple, BRKB can be a great spot there, and it's definitely a stock or ETF that I own overall. All right, what do we got here? So let me jump into let's go to the Fed here, and let's take a look at some expectations. So jump back in and give you guys the iPad screen there. Here we go. So the next meeting, we got the meeting today, no rate cut. I think that was kind of expected. That was all baked in. But now the next meeting is the one that's going to be most under scrutiny. This is the one that everyone is focused on here. And when we look at the probabilities, we can see the fact that no one, in terms of this future outlook here, believes that interest rates in September, by that September 18th meeting, will be where they're at today. You can see that over 90%, 90.5% is banking in that we will have at least a 25 basis point cut in terms of the Fed funds rate. There's still a subset, not the other 9.5%, that believes we will get a 50 basis point cut as it pertains. So September 18th, there's still a lot of data that can come out. There's still a lot that can happen within the economy, within the jobs market from that standpoint. So definitely something to look forward to when you are getting into the investing here, because the stocks that you buy today, make sure we're accounting for what's going to be going on with overall interest rates moving forward. So now let's look at probabilities moving out a little bit further. And as we could see here, right now we are at that 5.25 rate. So no one thinking that we are going to be at that same spot. There's the roughly 90% for the September meeting there overall. But they believe that in the next meeting in November, we are likely to get another cut. So that will be 25.25. And even after that, we have one more meeting. So there's 3 total the rest of 2024. 63% believe that we will be down another 25 basis points. So right now, where's the market? The market is baking in 3 interest rate cuts right now by the end of 2024. Now, to me, and this is something that, if you've regularly joined this show, you know that I believe that we are still in the camp of 2 interest rate cuts. And I think that's, we're going to obviously follow the data and see where things are. But I believe 2 is still where I'm kind of expecting things to come by the end of the year. But usually when the Fed starts, whether we're increasing or decreasing, it's usually not a cut and then we hold for 6 months and then we cut again. It's usually once we start the process, we're going to do it slowly and gradually, but we're going to continue moving on and get it to a spot that we believe is notable from that standpoint there. So, all right, let me jump up on some other questions here. Make sure I did not miss any there. Boom, boom, boom. Anyone like O for a REIT? O is going to be solid. O is a great management team. One I've interviewed for a number of years. Growth isn't going to be there. I don't expect tons in terms of growth. It's got a solid yield, monthly dividend from that standpoint. Just overall solid. Not something that's going to knock your socks off though. If growth is what you are in fact looking for there. What else do we got here? So I am new to investing. I'm doing $3K a month. I'm currently doing $2K into QQQ, 500 into dividends like Coca-Cola, and 500 doing covered calls. What do you think of this? Any advice would help. And I think it's important that, you figure out what is your strategy. What are you looking for when it comes to investing? How much risk are you willing to take? And all of this stuff is things that we work through within my 6-week course. There's a link down below if you want to look for more information where you can work with me one-on-one to develop your personalized strategy, put together an action plan, and understand how you can build out this portfolio, analyze companies, and also value companies to make sure that they're not only safe, high quality companies, but you're buying them at good valuations from that standpoint there. So there's a link down below for those of you. And we do have currently 2 spots open in our one-on-one program right now. All right, what do we got? Jeremy, how are we doing there? You are very welcome there. Cameron, thoughts on ADR for a REIT? Let's see what ADR has been doing. I haven't looked at them in a while here. What we got? I'm assuming you think are you referring to ADC? Because ADC is the one I was referring to there a second ago, and ADC is very similar to the likes of Realty Income. But look at ADC there. ADC has gone from July 9th. So what is that? 12 days ago has gone from $60 up to $69 from that standpoint. So that is a very solid run in the past month or so, up 15% in those past few weeks there. So ADC is one I continue that's built very similar to that of Realty Income, both retail related REITs from that standpoint. But I like the top of their tenant profile. A lot of investment grade, a lot of exposure to the likes of Walmart and Tractor Supply, 2 companies that I like, that I think are safe, as opposed to when you look at Realty Income, the top of their tenant base is more geared towards Walgreens, CVS, Dollar General, and things like that, where those companies don't get me all that excited. I have some concerns about those companies moving forward. So those are just my thoughts overall. But when it comes to Realty Income, the percentages aren't that big. So let's say Walgreens went out of business. Well, that only equates to 2% of their annual rent that they receive. So easily replaced, and that could probably actually jack up the rents and bring them up to market for some of those leases there overall. So yep, that's what I thought you were referring to there. So that's my thoughts overall on ADC. And look at that, Sonny just hit that one right on the head there as well. So let's look at some of these other reports here with a few minutes that we do in fact have left. So let's go back to the iPad here, and let's start with taking a look at Google. And I never like to see that someone talking about Kathy Wood there, because we all know that I'm not a huge fan there overall. So here's a look at Google's search revenue dating back all the way to Q1 of 2022. The latest report that they just issued was Q2 2024. And we could see that it's grown from 39.6 billion up to 48.5 billion, which is a record for the company. YouTube, how do they do? Again, Alphabet owns the 2 largest search engines in the entire world. Part of the pullback in Alphabet this week was related to the report around OpenAI coming out with their own AI-related search engine. I don't know if this caught anyone by surprise by any means. This is something that's been talked about for some time. So for the stock to fall off 5% because of that is beyond me, and I believe that is something that we can kind of buy into. We've seen this before with Microsoft. Microsoft bringing on Bing. Okay, well, how is Bing? We do know that Google isn't just letting Google search become archaic and moving on. We do know the fact that Alphabet is utilizing their own AI related stuff as well, which will probably be there before OpenAI builds this brand new search engine from that standpoint. So will it have an impact? Sure. But are we talking about this massive presence that where Google's just going to go away from that standpoint? No, I think all of that's overblown from there. So let's take a look at some more stats here. You can see that Google Cloud was up to $10.3 billion. Look at that, back down just a few years ago. We have essentially almost doubled our Google Cloud from 5.8 up to 10.3. That was an 8.1% quarter over quarter change and a 28.8%, which is the fastest growth. Remember, when we were talking about Alphabet, and Alphabet had some sell-offs, what was it, a year ago or so, it was concerns around slowing growth as it pertains to cloud. Well, lo and behold, in the past few years, this is actually the fastest growth we have seen year over year from that standpoint when it comes to Alphabet. So a lot of good things there coming from Alphabet. And again, I think they had a fantastic report overall in terms of earnings. We could see they reported 1.89. That beat expectations. Revenue came in at 84.7 billion. That beat expectations. Again, the only light area was that YouTube advertising revenue, which did not grow as much as they thought. It came in at 8.66. Analysts were looking for 8.9. So that was a meaningful miss in terms of YouTube, and we need to get that YouTube advertising up because these YouTubers need to get paid more. I may be biased. So here's the Alphabet quarterly revenue year over year change. You could see that we were on, 5 consecutive quarters of year over year growth, and that was snapped here in Q2. All good things must come to an end there overall, but I like to see that we are still in this growth trajectory moving forward. We already looked at Merck. Let's take a look at Microsoft. So Microsoft could have been a lot worse. We were talking about a stock that was down roughly 7% after hours yesterday. And I know one of the folks that are in here listening on actually bought the stock. And I don't do really any purchasing after hours just because of the low volume, and it could be very misleading. But that was one that was misleading in a favorable position because it went down 7%, was only down 1% today. So that was a nice little gain that they probably saw today. But Microsoft reported their earnings. Let's take a look at how those were. Again, cloud was a concern when it came to Microsoft. Didn't do as well as the likes of Google. And we'll see what AWS with Amazon's doing tomorrow when it came to that. So Microsoft EPS came in at $2.95, slightly beating expectations. Revenue came in at $64.7 billion, beating expectations there pretty handily. Revenues increased overall. Total company revenues 15% year over year. That was a good thing there. Overall. And then let's take a look at where is our cloud. Cloud generated $28.5 billion in revenue. Total was up 19%, but that total of 28.5 was below expectations of $28.6 billion. So again, we are in this period of time where we're complaining about, we didn't get 31%, we only got 29%. So this is a company that is still growing its cloud segment extremely fast from that standpoint. If I get a 5 or 6, 7% pullback because we had 29% growth instead of 31, that's something that I believe is entirely overblown. We didn't get our 7% pullback, unfortunately. So with only a 1% move isn't enough for me to add to my overall position as it pertains to Microsoft there. So now let's look at one more. Let's take a look here at AMD. AMD had a day. How about that? Have a day, AMD. But at the same time, we're talking about a stock that was at one point up at $227. And that was back in March. The stock has fallen before today roughly 40%. It was over 40% from those highs there. Up at 227, dipped down well below 140. This was one that going into earnings, it wasn't set up to perfection. There's a lot of these companies, especially these large Mag 7 companies that have just ripped higher. Now when the valuation is stretched and it's earnings time, okay, the stock has ripped higher. Is valuation going to back it up? Is the earnings, in fact, going to back it up? Because if earnings isn't growing as fast and the stock is jetting higher, there's kind of a disconnect. And that's when valuation just gets stretched and stretched and stretched until finally something's got to give. Either earnings has to jump or the stock price is going to come back down from that standpoint. So that's why, we don't just because we like the company, just jump into it, because then you're just, throwing money away in a sense. Either a stock is just staying stagnant because you bought it at a bad period and now you got to go through the waiting period to let earnings catch up. Or in fact, we want to condense that multiple and the stock price has to fall. Sure. Now, if you're saying, well, I'm not going to lose money overall. Yeah, but you probably could have made money elsewhere by just looking at valuation, finding high quality companies at great entry points from that standpoint. So AMD overall just knocked it out of the park. Brought up Nvidia, where Nvidia actually outpaced them overall, which is pretty funny to see there. But AMD reported their Q2, and all the focus was around that M300X AI chip. So that is AMD versus Nvidia, which has, you could say it's been a 2-horse race, but it's really been a 1-horse race with Nvidia, and then below it is going to be AMD. Not really, I wouldn't even call it, the brother sister comparison either, just because of how well Nvidia has done. But AMD can be geared more towards PCs. And with a PC refresh cycle coming, that's why I believe there's a lot of upside when it comes to AMD. Now, valuation wise, with this big jump in the stock and with the jump in Nvidia, the valuations actually aren't that far apart from one another. So now you have to look at yourself when we're talking about two stocks that have the same exact valuation. Well, do they have the same exact growth rate expected moving forward? And when it comes to choosing one, if we have both stocks trading at a 40 PE, call it, and one company is going to grow at 50% the next 3 years on average per year, and the other company is going to grow 30% on average over the next 3 years on an annual basis, well, we're probably going to go for the faster growing one at that point there, which is still Nvidia. So AMD, I've been continuing to play through the options, but I would like to see earnings catch up a little more to make that valuation that much more intriguing from that standpoint. But again, I still think there's plenty of upside when it comes to AMD, a stock I would not mind owning by any means. Both AMD and Nvidia. I already own a bunch of Nvidia, but looking to add some more, I could definitely do it with the likes of AMD. If you had to choose one, though, let me know in the comments starting this point forward. And let's just go to the end of the year. Let's not look out like 10 years. By the end of 2024, do you believe that AMD will have performed better in terms of share price growth, or will it be Nvidia? Now, we've gotten the latest reports when it comes to AMD. We haven't gotten the latest reports when it comes to Nvidia quite yet. So what would you pick? Let me know in the comment section down there. Let me make sure I'm not missing any of these comments that are here either. Thoughts on Broadcom? It was down, missed it. Do you think it's a good stock to own when the price lowers? Yes, that's definitely one that's high on my watch list. I already own some. I own a good portion of Broadcom. Actually trimmed it when it got real high prior to the big drop off there. I was hoping it would drop a little bit more to get back in and bring those shares back online, but didn't quite hit there all the way. Someone's trying to rile me up by asking about MPW. We're not even going there. We're not going into Tesla. We're not going into MPW today. But if you're new to the live show, I don't like MPW. Finally caught alive. Hot fever. Thanks for tuning in. Sometimes you get lucky. Sometimes you get lucky. That is so true there. Greetings, Mark from Arizona. First live show. Awesome. Thanks for tuning in. Been watching your videos for a bit, and you have got me into investing after I lost almost everything in a divorce after I just retired from the Army. Well, first and foremost, I want to first say thank you for your service. I come from a family that is, served in the military, so I have that, that great appreciation, understand everything that goes into the commitment there. So that's where I want to start. Next, I want to say thank you for the support, and if any way, shape, or form, my videos have helped you get through that tough period, then that's always a great thing. And that's one reason I do what I do here is the focus is always on us retail investors. I'm trying to help people that may not have access to certain things or weren't, properly didn't have an upbringing that was around investing and things like that, and help them, get them on a path to be able to build wealth. Again, I always start this show by saying we all have one goal in common, and that's to build wealth. Now, we may have different strategies and how we go about it, but we all have one common goal, and that's what I like to call building generational wealth. Every single person that I work with within my 6-week program, I want to focus on helping them not only build wealth, but build generational wealth so that they can leave a lasting legacy for any sort of family member, friends, whoever it may be, whoever they could have a positive impact on from a financial perspective moving forward. That's why we do it. And again, just to remind you, we do have 2 spots open right now for our coaching program, our one-on-one coaching program that'll be closing down very shortly. You can see a link down in the description below, our 6-week investing accelerator program. And if you're interested in joining the newsletter, you can definitely do that completely free. And we have a 7-day trial for our premium newsletter as well. You get full access to the Discord, whether you are a free newsletter subscriber or a paid one. If you are paid, you obviously get access to more rooms, which includes my trade alerts, any of our deep dives and things like that. So definitely check that out. That is the Stock Investor's Edge. There's also a link down below for that. So again, it's completely free to join if you just want that side of things there. All right, what do we got in our last few minutes? We talked about AMD. Absolutely there, Jeff. Sometimes you learn. Nvidia, AMD. Been investing in Nvidia since 2016. Going to hold it for another 5 years. Can't blame you. Thoughts on PANW? So that's one that I have had on my watch list. And, one of my business partners, team members in the Stock Investors Edge is a big believer in PANW and has a sizable position in there. I would have thought with everything that was going on with CrowdStrike that it would, and I know they're not a complete match one for one. They're both in the cybersecurity sector, but they have different elements to them. But I at least would have thought we would have got a little bit of a pick-me-up with all the CrowdStrike debacle. But when you look out, just look at the past 5 days, Palo Alto hasn't even gained 1%. So didn't really get much impact there at all as it pertains to the CrowdStrike issues there. So was hoping for a little bit. Zscaler, though, is another one. Zscaler did get a nice little bump there overall, or I was expecting, I should say, a nice little bump. And that's another one that didn't really move all that much. So that kind of tells you the power that CrowdStrike has. Hey, Mark, which is better right now, UPS or Pfizer? So two completely different companies in different sectors. UPS is quite cheap right now. So investing in UPS, you got to ask yourself a few things. You got to ask yourself the strength of the consumer, because if the consumer isn't continuing to order things, then there's no reason for UPS to be delivering anything from that standpoint. So you can usually get a good indication on how things are going in terms of consumers is by tracking the transportation sector, because that is how the economy rolls there. If people are not, businesses, consumers are not ordering things, there's no reason for those rails to go. There's no reason for those UPS to dispatch more trucks than they need to, or FedEx and things like that. So definitely always pay attention to the transportation. That's usually the first indicator in terms of an economy that I like to track there. Both companies are extremely cheap in my eyes right now. It's just the question of, what you have to ask yourself around the consumer, because the UPS is going to be tied to that in some shape or form. JC, Qualcomm, I like it. Good report there. The YMAX, I'm assuming you're referring to those high yield ones. Nah, they're okay from that standpoint there. Did Tom Lee will be right with IW? I'm assuming that's IWM with the small caps. It's really hard to go against Tom Lee. Dating all the way back to the pandemic, his success record has been so spot on. Now, you compare that to someone of Cathie Wood, and you look at Cathie Wood's return over the past 5 years. Not only are you paying a high expense fee, but you're in a negative 20-some% return on that investment by investing in some of those ARK funds. That is the definition there, folks, of a one-hit wonder. That is someone that has seen their stock price go up 4x, and still that 4x increase is included in that 5-year average, and you're still down 20%. That's pretty shameful from that standpoint there. Not somewhere where I want to be investing my hard-earned money in, especially when I'm paying extremely high expense fees for nothing in return. So it's definitely hard to go against Tom Lee and his track record, especially as of late. Question here, is SCHH a good starter? What do you mean by a good starter? Is this like going to be your largest position? Because in terms of largest position, it's usually going to be something more broad, like an SPY, a VOO, an SCHD, and things like that. Whereas SCHH, IYR, VNQ, all of these are REIT focused. They're real estate focused. So it just kind of puts you in a box for that one particular sector. So no, I wouldn't go and ever have a sector specific ETF at the top of my portfolio. I always want to build out from that standpoint there. So awesome. So now I want to get to the quick update here, folks, and take kind of a poll and do our regular check-in as it pertains to YouTube in general, to figure out what type of content do you guys enjoy that I put out? What type of content do you want to see more of that I may or may not put out? Do you want to keep the weekly live shows? Or would you like a third video that's maybe just a short video, during earnings time? Maybe we go through three different earnings reports, and I kind of dive into each of those for you, telling you where valuation is right now, where it is on a forward basis, Does the stock look like a buy, a hold, or a sell, and give ratings from that standpoint? Give me some feedback on what you guys are looking for, because after all, I'm putting these videos out to help folks like you guys moving forward. So do we want to keep the live show? Do you guys enjoy the live show? Or is it something where, no, just do a short video that goes through what's going on in the market, covering a lot of the same data that we do in the live show, and then maybe touching on a little bit more in depth on some of these key reports that's coming out? That's going to be number one. Number two is, what type of content do you want to see? So we've really focused a lot on, ETFs and dividend focused stocks, but in talking with a lot of you that have emailed me or have gone through my 6-week course, or you're part of our Discord community, which if you're not, definitely join, that's free down below, is the fact that you want me to start introducing some more growth stocks. All the stocks that I look at, they don't want me getting in, if I don't own SoFi, it's probably not something, or the Palantirs of the world. But introducing some growth stocks and not just sticking particular to dividend stocks. So do you like just seeing dividend focused stocks, or do you like the mix that we've kind of been doing and putting out here in the past? The past few weeks, we've kind of done a mix where maybe it's a dividend stock, maybe it's a growth stock there, not just sticking to one lane from that standpoint. So let me know, what type of videos do you guys want to see more of, or maybe we don't do. So let's see what we got here. Let me jump in. What do we got here? Cindy says, keep the live show weekly, please. All right. Love the power hour. Thank you, Tom. Live meeting like this is very helpful in addition to the videos. Praveen wants it all. Yes, live show, live. Keep the power hour live. Okay, all right. I think we're overwhelming keeping the live show. So now tell me what type of content that you guys want from that standpoint. Just do both, Mark. JK, live show's better. Keep the live show. Live, maybe announce in the latest uploaded video so we know when to tune in. Every Wednesday, every single Wednesday at 4 p.m. Pacific, 7 p.m. Eastern time is our weekly live show. Would like a mix, not just dividend stocks. Perfect. So that's what we've kind of been introducing a little bit more, Jeff, is truly looking at which stocks I believe is the best buys and ones to consider or have high on your watch list, regardless of whether it pays a dividend or doesn't pay a dividend, because that's, again, how my portfolio reflects. Is I invest primarily in dividend stocks, but doesn't mean I turn a blind eye to growth stocks. After all, I own the likes of Alphabet and Meta and Microsoft and Visa, and although some of those companies pay dividends now, no one invests in them strictly for the dividend. I've owned Crowdstrike in the past, never covered it because we were focusing only on dividend stocks in the video. But if people want to just truly see a mix of all of these different companies, we will gladly do that, and that'll open up a lot more opportunities based on what I'm actually truly looking at, rather than what am I looking at just from a dividend or ETF focus. So we'll continue to mix in ETF videos. We'll continue to mix in REIT videos. Seems like you guys like those a lot. Every single month we have our kind of top stocks to watch, top stocks to buy. We just put that one out where instead of going through 4 stocks, we went through 2 ETFs and 2 individual stocks. So if you haven't checked out that video yet, definitely make sure we tune into that. John, good to see you. Keeping the live show. Tom says, mix it up. Mix up the stocks. So growth and dividend. Love it. Chuck says, I never miss your live show. The best live show on YouTube. I appreciate that. Thank you, Chuck. Cindy says, dividend and growth stocks. ETFs, yes, as well in the videos. Awesome. Hot Fiva likes both. They love it all. I would like to see a combination, weekly live shows, and mix it up. Okay, so I think we have some good. So what we want to do here is the fact that is moving forward, we're going to mix it up. We're not going to be just dividend focused. Now, naturally, I still look mostly at dividend focused stocks. So we'll still have a good portion of companies paying dividends in some shape or form, but we will also not just keep out growth stocks if that's something that I'm actually looking at from that perspective there. So I'd be curious to hear about some riskier growth stocks you may find interesting. So again, me being leaning on the side of risk averse, I don't dip into penny stocks. I don't dip into many speculative names. And I think that's one reason that many people follow me, though, is I'm not, there's a lot of folks that are out there, these YouTube folks, that's more of, hey, what's the most popular ticker right now? Let me go do a video on it. And they kind of blow smoke from that standpoint. You'll see a lot of these YouTube folks that don't go into the valuation concepts and have good reasonings for buying a particular stock. And there's just a lot of people out there that are just strictly focused on getting views, where obviously views are important because that's one way I get paid. But the stocks that I go through and the stocks that I choose on my videos, I'm never going to choose them just because it's a popular stock ticker at that particular time. So I'm truly looking at stocks. If these are on my, if it's a video on stocks on my watch list, they are truly on my watch list. And that's why I have the Stock Investor's Edge. That's why I show my entire portfolio, because I'm trying to be completely transparent with folks so that they can see that, hey, this guy actually backs it up from what he's talking about from that standpoint. So I thank you guys for being, a part of this journey with me. It's always great to be with you, Guillermo. Mark for president. I don't know if I have time for that. I'm still trying to coach Little League and keep 6-year-olds paying attention. I don't know if I can run a country. Cindy agrees. Uh-oh. I got 2 votes there. All your content is beneficial and can't even talk. Informative. Thank you. I appreciate that. Hunker down, stocks. Keep dollar cost averaging and just ride. Keep dollar cost averaging into PLD or just ride the increase for a while. I've enjoyed the increase. From a valuation perspective, it's not something that's terribly cheap by any means. Not expensive, but not something that's, extremely cheap. So I like where my positioning is in PLD right now is one of my largest ones there. I want to know more about the next best growth stocks to buy each week with previous results like you do on your email list, but each week. Got it. Okay. Next best growth stocks to buy each week. So instead of in trying to paraphrase what you're trying to say here, Chuck, is, are you looking like right now I do here's the best stocks to buy for the month of X. Are you looking that for the week of and kind of do that video, at least one of my 2 videos be one of those each and every week? Is that what you're saying there from that standpoint? Damon loves the channel. How about a few stocks on your weekly watch list? That was kind of the same thing from that standpoint. Sounds like it. So we want more ideas on stocks to consider buying. Okay, perfect. Chuck said yeah on that. And I'm assuming that's what Damon's referring to there always. Love your analysis on the long term as well, Benson. Yep. So for me, you're never going to find any short term. I'm not a day trader by any means. The short term stuff I do is going to be options. And for the people that are interested in options, they usually join our options webinar, which if you are interested in that, just to kind of give you a sneak peek right here, make sure you don't tell anyone else, is the fact that we are going to have that options webinar. It's been very popular. It's sold out every single time that we've had it, but we will be having that again in August. So right around mid-August time period, mid to late August, is we will be having our next options webinar. So if you're interested in that, make sure you stay tuned, and we'll definitely be making note of that, making you well aware on our live show when we'll be doing that next. So again, it's a great way. And as I just mentioned, just in the last 2 days, we made a couple $1,000s just based on AMD trades as well as Meta trades. And we'll see what we got for Amazon in store tomorrow also. No option plays in them right now, but definitely going to take a look, see where the volume is, and see what's going on there. So I show you guys everything that I do as it pertains to options. So if you're interested in that options webinar, make sure you stay tuned, and we will be doing the kind of a back to school special on that one as well. So awesome. So we are over our power hour. Our hour time frame here went a little over, so I apologize, but I thank you guys for being a part of it. For those of you that are on this show regularly, I truly appreciate the support. For those of you first time, thanks for joining. Again, if this is the first time meeting, my name is Mark Rusha. I'm a CPA here in the state of California. If you guys haven't done so, make sure you smash that like button, as I truly appreciate it. And it really helps with the algorithm as it pertains to YouTube. So thanks for being with me. And if you guys are interested, definitely check out our newsletter. That's the easiest access to me. You can join our growing Discord community completely free from that standpoint. And if you're interested in claiming one of those final 2 spots as it pertains to our coaching program, which many of the folks in here have already taken and can vouch for how helpful that has been in their investing journey, you can definitely ask any of those questions there. So there's a link down for that one as well, and we can jump on a 15-minute call. So again, thank you guys for being with me. Have a great rest of your evening, and we'll see you next week. Take care.